If you ever doubted the silver squeeze, well, I'm going to be talking about another area of great importance that is providing evidence that the squeeze is tightening. Let's talk about it as we explore. There's a lot going on in the silver market for sure, and I've been covering it here almost every step of the way. My most recent video discussed what a strange anomaly occurred within the last couple of days, and I think now we're getting more information about what's happening in the silver squeeze. Now, remember, this silver squeeze that's occurring now is exact opposite of what happened back in 2021. Back in 2021, there was a retail squeeze of physical bullion, much like what you see here, that you could buy or not buy. And the premiums showed that. The premiums skyrocketed during that time. And that's really where the price went, is the skyrocketing of the premiums, both when you went to sell your silver and when you went to buy it. On this end, it's happening in the exact opposite direction, where there's a squeeze for industrial grade silver for utilization in the solar, photovoltaics, other industrial avenues, AI, and the like. And that's where the squeeze is happening now. And there's a couple of signs that we're seeing that, especially with the LBMA and the COMEX. I posted a video about that this morning. I'm going to link to it at the end screen of this video. But what is now being talked about is silver lease rates that we're seeing surge to multi-year highs as we see some of the tightness build. And we see these lease rates now surging above 6%. And some of that's been briefly covered, but this is something that's quite staggering to see. These markets are showing fresh signs of stress, as implied 1-month lease rates have spiked sharply above 6%, reaching levels not seen in years, according to Bloomberg data. And again, as I mentioned, how the retail market is really not being affected by this. In fact, the actual spot price right now is actually just slightly up in late trading. There's not been a real smackdown or Friday smackdown, but I think there's some leeway, as I've talked about in a prior video with these banks with a new rule, the SLW rule rather, and that is something that I think is going to be a fight against some of the breakout that we've been saying here. But my friends over at Summit Metals have been very kind to offer to you a nice discount code for silver. All you got to do is just enter in a special code in order to take advantage of $10 off for orders above $500. And this is for any item until the 31st of July. And that code is Summit Salivate Summer. Say that 5 times fast. All the S's are capitalized. So use code Summit Salivate Summer at checkout, and you can get $10 off of orders of $500 and above. So just go to summitmetals.com and enter that code to take advantage of that deal. So this is fascinating what we're seeing happening here, these lease rates. The lease rate, which is the cost of borrowing silver, has climbed rapidly since January of this year, pointing to tighter availability of physical metal in the market. Elevated lease rates often indicate increased demand from short sellers who need to borrow metal or a tighter physical supply. Lease rates moving up like this can indicate that holders of physical silver are reluctant to lead, possibly due to strong industrial demand or tightness in supply chains, according to Tai Wong, an independent metals trader based in New York. Spot silver prices, as we're last trading, about $38.50 on Tuesday. That's kind of the high that we've seen this week, having gained around 25% so far this year. Gold prices, meanwhile, have hovered near $33.50 per ounce. In fact, that's right where it is right now. That's up about 18% so far year to date. Both metals have benefited from robust investor interest and concerns over sticky inflation and global geopolitical tensions. And by the way, not only is inflation a problem, and I think it is pulled back some, but still it's a problem and it's still there. But we also have tariffs. And in fact, we're seeing now confirmation on tariffs that Canada is placing on silver coming out of the United States into its country. A friend of mine posted sent me a link to to a website that showed that. It's kind of intriguing to see that happen. So we may not be tariffing silver coming into the United States, but it sounds like Canada is from the United States. And who knows, we may reciprocate in that matter for any silver coming out of Canada into the United States. I don't know. We'll see. I kind of doubt that's going to happen. The administration already announced that there were not going to be any tariffs on silver or gold back on April 2nd. But that does not mean they can't change their mind. They've done that before too. Now, Octavio Costa, a portfolio manager at Crescat Capital, highlighted the spike in lease rates on social media, drawing a parallel with silver's breakout earlier this year. And we see that happening. It's crazy. Lease rates are surging, just like what we saw on platinum before its major breakout a few weeks ago. And platinum, as you know, has been skyrocketing in price dramatically, up about 60% so far this year. It's had a pullback, as well as palladium, from its massive surge that we saw just yesterday. But nonetheless, platinum is still above $1,400 an ounce. And it did get almost to $1,500 earlier in the day. Historically, spikes in lease rates can precede sharp moves in the underlying metal price. During the 2011 silver bull market, for example, when silver briefly traded near $50 an ounce, lease rates saw similar dislocations as market participants scrambled for physical metal. Of course, that was also a retail squeeze, as well as the metal that's held by the LBMA and also the COMEX. Now, think about this for a moment, folks. I remember distinctly back during the, quote, silver squeeze, I use that term loosely in 2021 for physical silver, there was a lot of 1,000-ounce bars hanging out there. In fact, some dealers, and I documented this on this channel, were actually buying those bars and selling them to the general public. In fact, there was one organization that actually cut those bars, sliced them down to small increments and selling them off, 10, 15 ounces at a time. They would slice right down them, and you could buy those. It's kind of wild to see that happen, because there was a shortage of coins and of smaller size investment grade bars out there. It's quite interesting to see and how things have changed so dynamically in the market here today, with silver's price trading at 14-year highs. But I tell you what, with silver kind of really much not doing anything today, up 3 cents as the market is about to close, we can still celebrate. $38 silver is not something to laugh at. That's a great price. It's good to see that kind of movement with silver, for sure. And, many of us didn't think we'd see $38 silver for quite a while. And of course, there are others that believe that we're going to see silver go much, much higher, and it's only a matter of time before that happens. And I'm talking before the end of this month and before the end of this year. I had a poll on my live stream, the Sunday Night Market Watch. We do that every Sunday night to see where the price of silver is going to go and where the price of gold is going to go at the open of the Asian markets. And in that poll, I asked you, do you think we'll see silver reach $40 by the end of this week? Well, that's right now. We're literally minutes away from the markets closing. It doesn't look like it's going to happen. But you were exactly right. The week prior, we did see silver move to $38 an ounce, and it stayed there. And it's here closing out this week above $38. So that's a good sign. And so we'll see how it goes. Nonetheless, we did briefly see $39 silver for a day as well. So these sharp moves in silver's price and in the physical market as well have drawn the attention of both hedge funds and retail investors who are looking for signs of another squeeze in precious metals. The market participants will be closely watching to see if current supply-demand stress in the lease market translates into further upward momentum for silver prices. So we'll see what happens there. The Silver Institute believes that silver demand remains robust with significant industrial use in solar panels, electronics, and battery technologies. Mine production growth has struggled to keep pace with demand, leading some analysts to forecast potential deficits this year. And that very well could happen. There's other signs that the economy is doing better than what some say as well, and that means more demand for silver. And that could all weigh in on it. And I'm telling you, if silver's price goes up to $45 an ounce, I don't think that's really going to stop much demand for the metal on the industrial side, because with the amount of silver that's utilized in products, it's really not that big of an increase of the overall product if silver gets to $45 an ounce. But we'll see, with nations like China bringing in unrefined silver before it's processed, how are you going to price that? You look at the production cost of silver, especially as mined as a byproduct of other metals. There's a lot of room for profit there, and who knows who else is buying in that manner. So we'll see. Let me know what your thoughts are about this. I do precious metals news often on this channel. I post daily videos. So if you enjoy what I do here, I hope you will consider subscribing to the channel, pressing that notifications bell. And with that, I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.